Hey guys, it's Will. So these are my top 5 AI defense stocks. And if you've been watching the markets, you know things are starting to heat up. It's summer. I was just playing some golf with a friend, said he was having trouble with FOMO in the markets. And in the last couple of days, we've avoided that. We've gone live every morning at market open, but we've just been patiently watching. The past 2 days, we haven't traded. We're just waiting for setups. If you want to see how we trade moves live and we actually enter and exit when we do, you can join us inside of Stockmates. Right now, the last 3 months, we've averaged 17% returns, and we got a summer sale there. If you want to get this free Stockmate t-shirt included, it's the second link in the description down below. Let's jump in to the top 5 AI defense stocks. What we're looking at right now is going to be Big Bear AI. Number 2 is going to be CTM. Number 3 is going to be LDOS, Lidos. Number 4 is going to be Palantir. And number 5 is going to be Amentum. So I just told you everything right at the beginning, but let's jump in to number 1, which is Big Bear AI. Big Bear AI is down about 5% today. They're growing extremely quickly as they were just at around $1 a share back in October when we started covering them. At one point surging in January to $10 and then recently pulled back to $2 and is now at $3.91. So the market's growing. They're in a couple different markets. If you go to Big Bear AI, they have defense solutions specifically related to large language models and processing large amounts of data to be able to have AI-powered decision intelligence. So you can see they're working with the military here. If you go to defense, they are not just with Homeland and border security, they're also with travel and trade. So they're at the airports and working with TSA. They have their VeriScan along with TrueFace, which is biometric facial scanning to identify threats and process, again, all of the millions of profiles that come in and out of the US through the airports. Imagine one person trying to figure out, is this person a threat? Is this person a threat? And then try and remember and do all the research on each person. It's going to take forever. So Big Bear eliminates that. Big Bear does it easily and fast, and it does it at the airports. And personally, I've seen the technology firsthand. So when it comes down to identifying a market, a couple things we look at. There's 2 main indicators. The first indicator is market growth, AI defense. And you can see this is a market that has an annual growth rate of over 9% compounded annually, potentially over even 10% annually. So a fast growing market that's slowly rising faster and faster. So very much a fast growing market. Some estimates say that it's 15 to 20% in its year over year growth. And so you got to look at that as well. So the growth is there. But then the second indicator when identifying the market is the actual usage of the product. As I mentioned, we've used this product, or we've been scanned our face at different airports that we've flown out of. One of them was Denver International Airport, when we went to go actually meet a lot of these companies that I'm mentioning in this video at the Space Symposium in Denver, or in Colorado Springs, but we flew into Denver. They used it. So that's the second piece. The usage is there. Now we get into the analysis. And with Big Bear AI, you can look at BBAI stock. The recent market cap of just over $1 billion is pretty good. But then you start to see their financials. They recently reported earnings, and revenue is fairly on target. They missed just a little bit. Net income was slimmed down there, and it's up 51% year over year. So while they're improving, they're getting contracts, they also are seeing that their revenue just tapered off a tad, but that they're continually increasing year over year. So financials looking fairly good. Then the last piece of the analysis stage is going to be really looking at their chart. So what we know about the company, right? They're partnered with Homeland Security, the Pentagon. They're partnered with most of the defense agencies, and they have contracts in the hundreds of millions of dollars. So intrinsically, things are looking pretty good. Recently, we saw this pullback down to this previous support at $3.90. And it broke below this hyper bullish trend at $4. But we said, hey, we could see this pull down here and we're okay with that. The next move really would be a validation of this level and seeing it make this move right here. It's more bullish. It's basically indicating we're going to see a recovery of about 10 to 20%. And if it holds this level at 390, that's the move that we're looking for. So again, a 20% to 25% increase up into that high $4 range would be the next target for Big Bear. Outside of that, you do see it sell off recently. Not a whole lot of indication that it's going to slow up on the sell off though. While it's at the support, we did see maybe towards the end of the day find a little bit of support there, but still kind of holding below that moving average. So we got to see it break up. Would like to get a push back up above $4 would be good indication that this trend is going to continue, and we could potentially see that 10 to 20% move play out there. So with Big Bear where it is now, it seems like there's slightly less risk now being up at 390. We've seen it get into those lower levels, but if it's going to hold the overall trend, then this is the price at which we'd see it bounce potentially. And that is why we're going to be watching it closely. Most likely, we'll be trading it in our market live session tomorrow if things continue to go according to plan with Big Bear. So I'm very happy with it in our long-term position. In our short-term position, we've done some research, right? We sold a small portion of it up here when we were in profit, and we were able to ride about a 20%, 25% swing the other day, which was good. Then we see it sell back down to this level. We still got some of our position, and a buy opportunity may present itself tomorrow or maybe next week on Monday, depending on how the market reacts at market open. So Big Bear is at number one for that reason. I think they're growing. I think to see them in that $5 to $7 range could make a whole lot of sense. And that's why we have it there at number one. Number two is going to be CTM stock. Now, while Big Bear is pretty fast and lean and they're government focused, CTM is also government focused, but CTM stock is more in security rather than just AI. So CTM is right here. You can see the level that it's been consolidating between right here. And we start to see it really hold this level, slowly building its market cap here and continuing to build over the last month and slowly starting to build this momentum. So as we take a look at CTM stock, they've had some crazy volatility back here where they increased about 100 million in market cap. Not a huge increase, but they did increase about 100 million in market cap. What does that mean? Well, if we're going to see them build market cap, we're going to see it happen in a way that is going to be steady, but there's going to be times where it surges. It looks slightly like a pump, but what I can tell you is that this is a stock that when you look at the market of AI defense and where they are pretty quiet. You can look at them from a perspective of their company having contracts, hundreds of millions of dollars. They recently announced earnings with increased revenues. They have $100 million contract there with Navy seaports, and they work with specifically they work with the government in cybersecurity to process large amounts of data for them. And they have some subsidiaries. They have their different consulting subsidiaries inside the company. When you look at their stock, they just reported increased revenues and net income is better 71% year over year. So this is where it gets interesting. They bring in between 11 and 12 million dollars per quarter, and their market cap is still holding below 100 million. So while they might not have as much certainty as Big Bear or as Palantir or some of the other companies, the reason we have them at number two is because of their potential for reaching that 200 to 500 million dollar market cap, which would put them in that range of $3 to $5 a share. So at their current price of $1, I see a lot of upside. So we have positions in CTM. I think we've brought our average down just a little bit to about $1.10. So we're down a little bit there. But again, looking for this swing to take place, it's about a 50 to 70% swing into this $1.85 range. That's where we've seen it get to in the past. But outside of the past, they do continue to secure contracts in Q1 that showed up positively on the balance sheet. So the other part about this micro cap stock is that they have asymmetric upside, right? They're positioned to scale. They recently came out with a new article that they were approved for level 3 appraisal, CMMI, which means capability for them to expand for bigger government contracts. So right now they have the Navy Seaport contract. I think they got an Army contract in there. There's the Naval Air Force. But what you're looking for here is that they continue to get bigger contracts servicing the US government, and they focus on the cybersecurity and large amounts of data and software. So when it comes to the focus on digital tech, they're going to be one of the companies that could be considered for a lot of contracts in the future. So again, we'll be watching to see that it holds above this EMA. Right now it is recently pulled down, and it's looking like maybe it's making that way back down to 94 cents. So a little more on the bearish side there, but it is trying to hold above this EMA and this SMA, and it is trying to hold this rising support level at which we could see it bounce up into this $1.40 to $1.70 range. It's just taken a tremendous amount of patience as the stock really has consolidated for the last 3 months from left to right. So they have execution risk, of course, like we want to see them continue to get contracts, but they secured for sure about $5 million per quarter in revenue, which is about half of their last recorded revenue. So that's good for them. Getting into number 3. Number 3 is going to be Lidos. Lidos is a company that focuses on defense and government IT engineering. They have contracts with the Department of Defense. They have contracts with Department of Homeland Security, and they're pretty heavily involved in the intelligence community. And they recently pulled back here from highs of $200. So you can see their overall trend. They've been very bullish, shot up to $200 at one point before pulling down here to about 147. So they're starting to push and try and push above this 200-day moving average. And as of recently, to continue that trend, they've looked like they've kind of pulled back a little bit. It looks a little overextended, and we might even see it sell down more. But the overall direction is looking good, and that's the type of trend maybe we could see continue, right? Getting back into this trend, getting up into these levels. I don't know that it would be that much, probably be more like this, about a 10 to 20% swing up would be kind of a continuation of their overall pattern. They started to make that move. Now, when it comes to Lidos, they got multi-billion-dollar contracts. They're a little bit better positioned for financial revenue. They have a $19 billion contract, but if you take a look at their last quarter, they were at $4 billion in revenue and a net income of $360 million. So billions in revenue is a good position to be at with an $18 billion market cap, right? Just keep that in mind. $18 billion market cap, so under 20 billion, but they brought in $4 billion in revenue. So really looking good on that side of things. If you wanted to compare the two, like Big Bear is compared, for example, to Lidos, right at TSA, you also have those machines that you stand like this and they go vroom, and they scan you. Those are the machines that are specifically for you to get scanned full body, and it's by Lidos. So Lidos does that similar to Big Bear. So that's part of why we focus on Lidos as a defense company, as they're closely related. Now, if we pull up Lidos and you take a look at their recent moves, not only are they in defense, but they're also in space, pretty big in space. You can take a look at some of their markets. Their main market is mostly defense, but they're also in aviation, energy, and industry, as well as government, healthcare, homeland, intelligence, science, and space. And if we take a look at defense specifically, they have cybersecurity, they've got manufacturing, and they focus on systems that are meant to digitally modernize the different companies they work with. It says
they are working with the US, and they got more than 6,500 employees that are formerly US Armed Forces. You can kind of see how they work with different companies. I don't know what that is. Is that maybe Archer Aviation? I'm not really sure what that is. But they have some good contracts in the hundreds of millions, actually multi-billion-dollar contracts. That there's another $8.8 million contract there for mobile communications. But the thing is they're popping up almost every single day. So you always have these new contracts popping up. So their revenue is most likely pretty safe, pretty steady, and they're more of a less high risk stock. Most likely we'll see them, continue their overall direction, and I see them as, a pretty safe bet. Right now they are pulling down, so no indication of a reversal just yet. I would wait a lot longer most likely, or until we start to see confirmation that they are finding a support and it's starting to recover. Otherwise, you do see this downward momentum, and it probably has a greater chance. Most stocks do have a greater chance of continuing in the direction they're going than reversing. So as it's selling off, I would just give it some time, wait for some more confirmation and start to see it reverse before entering a position. But LDOS, really good with their intelligence. They got diversified services in AI and defense. So that's why we'll be watching them closely, why they're on there at number 3. Now, keep in mind that market cap, because we're getting to number 4 here, which is Palantir. When it comes to Palantir, they are interesting, right? Because everybody talks about Palantir, and they're at a high right now of $122 a share. So just below their all-time high, which they hit just a few weeks ago. And as we start to see them at the high, there's an interesting perspective for why we have them at number 4, which is if you look at PLTR, right? PLTR stock, their recent earnings came in at $800 million in revenue, which they beat their earnings. Their net income's at $200 million. But if you look at their market cap, it's at $288 billion. So why does this concern me? Why is it not number 1? Why is it at number 4? Well, because Palantir is one of the most innovative companies in defense. They have software. They do have millions and millions of dollars in contracts, if not multi-billion-dollar contracts. But while their net profit margins are pretty good, their net income and their revenue holding under $1 billion. So what did we just talk about? Well, we were just looking at Lidos, right? Lidos is under $20 billion market cap, while Palantir is at $288 billion. And Lidos has $4 billion a quarter in revenue, $4.24 billion per quarter. And Palantir, even though they are over 10 times the market cap of Lidos, Palantir had only $800 million in revenue. So in other words, for the market cap, Palantir is more overextended, and they're more of an overbought asset when you consider the market cap, considering their net income and how much revenue they're generating. Their market cap is fairly absurd compared to the amount of revenue they're bringing in. Like we just mentioned, there's a stock that is less than half of the size of Palantir, and it has revenues of 4 times that of Palantir. So from a value perspective, Palantir seems very much overvalued at the moment. But the reason we have it here at number 4 is because they have had their consistent uptrend in momentum, and they do continue to secure contracts. I do see them as overbought right now. I would imagine Palantir is going to sell back down into this $92 range. Could take a couple months, could take a couple weeks. We don't really know. But I would imagine that there's a higher risk for a sell down currently than for them to recover. But the reason we have it at number 4 is because there's so much attention, there's so much eyeballs on Palantir, and a lot of it is euphoric. Some of it is a fear of missing out, and it's not really tying into the type of investment outlook that's healthy for someone to have to trade and invest confidently and profitably. If you're going to trade and invest confidently and profitably, Looking at Palantir back when they were around $20 a share or $30 a share, right here around, for example, the elections, we did start covering them a little bit there. It made more sense. But now that they're up at like $133 a share, there's nothing but FOMO right now. There's FOMO that's going to continue up. When the margin for profit, maybe if it continues up to all-time highs, there's that 5 to 7% increase. But the downside is about 10 to 30% downside if it keeps this trend that it's had here for the past 3 to 6 months. So if it really keeps this trend, it's much on the overbought side, the RSI, the MACD indicating that it's not a buy right now. In fact, it's at an all-time high and has a greater chance of most likely continuing this correction down than reversing. So they got AI platforms. They even got partnerships with Big Bear, for example. They got NATO allies. They got private enterprise. They have their what do you call it? Their Gotham is what they call it. Their intel and defense software that is for commercial and private enterprise. And they got institutional grade AI for a lot of companies that they work with. So they're not a small company. They're growing fast and everything else. But when you look at a $250 billion or $280 billion market cap, and they're bringing in less than $1 billion per quarter, it just doesn't really make sense from a valuation standpoint. So I would see them sell down here. It would make a lot of sense. So Palantir, I would say, while it's at number 4, a little bit more of one you want to watch. Like if you get a really good pullback down in this $90 range and we start to see it, get down to that support, then it would be something that we would entertain more for a buy. Otherwise, it's looking like a sell at the moment. Number 5 is a company that was recently private, but now is just as of recently become public, and that is Amentum. Amentum is focused on engineering, right? So we got a few trend breaks. We were expecting it to possibly get up into that $25 range. It did push up there for a second. It got up into $23, but simply sold back down here. But here's the thing. We don't have much for the chart. We know that their wins recently have been big, about a $250 million Department of Defense contract. They have $370 million contracts for logistics support. So their contracts with the government are big. They're focusing in cyber, in AI, in defense, but they just IPO'd. And since the IPO, they sold down from 29 down to 16 here in April. And they IPO'd back here in October. And they've recovered ever since. But now they're starting to recover. And this is where it gets interesting with their stock too. Their core offer is of AI is expanding, but AMTM stock just under $5 billion market cap, but their financials again looking pretty good. Actually, over $3 billion in revenue per quarter, and their financials are up like 70% year over year. Net income's up 100% year over year, so really increasing. But the net income still down there, right? They're barely positive, so their profit margins are pretty low. But the revenue at 3.5 billion, and that's per quarter, right? So we're talking about over a $10 billion per year company, and their market cap is just under 5 billion. So the upside there is pretty substantial. I think there could be some growth in Amentum there. And then when you look at their developments from a tech perspective, they have some defense divisions that are pretty top tier. We actually got to see them here at this SpaceX sponsored event, this Space Symposium. I don't think my picture's anywhere there, but we did have a media pass and we got to go backstage and meet some of these executives. And when it comes to their markets, they do have pretty clear focus on homeland security, on defense. So they got Army, Air Force, Navy, and Special Operations contracts, and they work in space as well. They got their Golden Dome, strengthening our nation's defense, which is a pretty big focus, right? Multi-layered shield against hypersonic, ballistic, cruise missiles, and advanced threats. So imagine detecting missiles early from space. All those types of things are part of AMTM's focus. So with the chart recently pulling down, we just saw them at $22. They're down to 20. We do see them pulling below this EMA and the RSI MACD starting to cross over into the bearish territory. But that's also the moment at which we might see them get down to a level at which it could be a buy. We do see a pretty strong support here right at this level. Support, support, support. And we did see them bounce here over the past few days. If we just take a look here, you can see it's bouncing here at around this 1950 price range. And so if we see them maybe hold that level and get back up into these levels here around $23, that's about a 10 to 15% margin for profit from current prices. If it can validate that support, maybe that EMA or that SMA right there, that green line, can act as support at around $20 a share. And if it holds that level, it starts to push up. Again, that 10 to 15% margin for profit could make a lot of sense here for AMTM. So that's what we'll be watching, see if any opportunities present themselves at market open. Thank you guys so much for watching. If I earned your thumbs up, hit the like button. Again, if you want to join us in those market live sessions, it's the second link in the description. That's our daily live trading every day, 6:30 a.m. Pacific Standard Time. You also get a free Stockmate t-shirt. Looks like this. Logo on the back, logo on the front. It's very comfortable. You get it for free when you enroll in lifetime access. And you also get our targets every day, along with this free book on the philosophy of the profitable trader. How do you build a plan? Ordinary versus profitable. It goes into all of it, including the emotional IQ as well, and how to really remain on top of it with the emotional side when investing. So if you want to grab that, you can get it for free when you join Stockmate. Hopefully you guys enjoyed. Would love to see you there in our market sessions. If I earned your thumbs up, hit the like button. Do consider subscribing, and I'll see you guys in the next video. Take care.